All right. So, welcome to the start of the Flow training plan. Again, let me first go over a few disclaimers as ES is heading towards those highs right there. Let me go over a few things, a few disclaimers, and not necessarily disclaimers, but pure information on how we can spot the difference between this Flow training plan and between the old, or not old, but between the other training plans. Bear with me. There's a lot of information I need to go through, but it is crucial for you to listen to that information. So if you're not listening to that information and you're only here for the training plan to watch this Notion and say, all right, just give me the training plan, I would advise don't even bother training this. Don't even look at this video. You need that information. Otherwise, it won't work. So that is very important to understand. Don't be lazy, please. All right. So right here on the right side of my screen, I have another Notion that you can't see, sorry. And I have written some things down that is basically me getting to the training plan. This was the first steps. So right here, I've written down, since we normally apply the filtering process and do a lot of hard work on the higher time frame, and this element is now taken away, it frees up brain points. Since we free up brain points, the training plan on one pair can be more difficult. I have quote unquote difficult. It's not necessarily more difficult, but since we normally apply a filtering process, which leads us to a pair or an instrument to trade, our hard work is done on that part, right? On that filtering process. That is, I think we can all agree on that. The hard work is done on getting to a pair to trade. So picking out the right pair to trade, picking out the right instrument to trade. That is the hard work for the filtering process. So for my normal trading model that I use, the hard work is done on the filtering process. Seeing, do we have stronger bearish and bullish do we have stronger bullish or bearish arguments? And from there you go, right? From there you see which pair or instrument you want to trade. That is important to understand. So the next thing I have written down is the subjectivity of the filtering process is now part of your trading plan. So the direction of your trades are still subjective, but the entry is still objective. Now, what I mean by this is the subjective part of the filtering process. So the filtering process is somewhat, in some senses, yes, it is very objective, but I always say there's like 20% subjectivity right there, right? 20 to 10% subjectivity. So, and that's not detrimental. It is not detrimental to your trading plan. That is very important, because what I usually did at the beginning of my trading, it's like a pendulum, right? You have a pendulum and it's swinging from one side to one side. It's trying to find balance in a sense. So when the pendulum swings to one side, I was fully subjective. Then I went to fully objective and it didn't work. And then I needed to find the balance. And that's exactly where I'm at. I found the balance in my correct trading plan, where we do have some subjectivity, because that is the potential that we have. That is where we grow, that subjectivity. The objectivity is not necessarily where we grow. The subjectivity is where that potential of your trading plan comes to play. That experience you have. That is very important. So again, it is not detrimental, and you'll see it is just as objective as the filtering process, only in a different way, because you are only focusing on one pair, one instrument. And then as well, when we start here, keep in mind that this is a naked model. And what I mean by a naked model, this is an inspiration model, you could say. Use this as an inspiration, give it your own twist. Don't add or remove certain concepts though. That is important. Don't suddenly add 90-minute cycles. Don't suddenly add ETA data ranges. Don't suddenly add new wick opening gaps. No, keep the core the same. But the time frames, when you go break even, for example, how you use the time frame. So on what time frame you want to enter, maybe the 5-minute or the 1 minute. That is things you can change, but changing the whole core and using different times and using different concepts, no, that's not what you want to do. That's messing up the whole trading plan. And that's the same for the other trading plans. That's the same for Delirium. That's the same for One Shot One Kill. That's the same for the Thank God It's Friday. The core, the concept is still the same. If you suddenly add some other stuff, it's not going to work anymore. And that is very important to realize. Everything that you need to know, I have taught in the mentorship. If I don't talk about it, it is not important. And maybe it is important, but a lot of things, for example, the Judas swing. The Judas swing is not important to pay attention to in my normal trading model Delirium because it is already incorporated into the trading plan itself. So I don't need to teach you it because you already do the Judas swing, you already trade the Judas swing, but you don't pay attention to it. That is very important to understand. So yes, give it your own tweak. Yes, change the time frames if you want to. Yes, change the routine I maybe go through, but don't all of a sudden add concepts here and there, and that is not what you want to do. That is not what you want to do. That's something you need to be very careful of, and that's not just what you need to be careful of in the flow trading plan, but as well other trading plans. It's very important to realize. So, as well, the next thing is you need to stick to one pair and one instrument only. So if you are now switching from EU and ES constantly with the flow trading plan, stop it. Don't do that. Don't. If you want to trade the flow trading plan, you need to consistently with discipline stick to one instrument only. So if you want to trade ES, stick to ES. If you want to trade EU, stick to EU. Don't trade anything else for, I would say, 6 months. 6 months, don't trade anything else. Only that instrument. That is also very important because otherwise, you need to understand when you are applying the filtering process and trading the filtering process, what you are doing, you are essentially mastering an entry pattern because you are consistently seeking the highest probability condition to trade in. That is something you master. So you master a pattern on the higher time frame, the highest probability condition you are looking for based on the price action, and of course the economic calendar. But based on the price action, you're looking at that instrument and saying, all right, this looks clean. So you're mastering a certain entry pattern. Certain pattern on the higher time frame you're mastering. And on the lower time frame, you are mastering the entry pattern. So on the lower time frame, you're seeing, all right, do we have the pattern? All right, perfect, I enter. That is mastering patterns. Certain patterns, of course, not patterns as in you're a retail trader and you trade support and resistance. No. Patterns as in you are trading certain conditions, I would say. You're not a pattern trader itself. That is very important to realize. So what you're doing here you are still trading patterns on the flow trading plan. Again, not your retail patterns. I don't want to hear it. But what you're doing here is you are mastering an instrument. You're not necessarily mastering an entry pattern itself. You are mastering an instrument. And then with mastering an instrument, you are also mastering those patterns. So, but you are mastering certain patterns for that specific instrument. That pattern on ES will not be the same as on EU. Yes, it might have the same characteristics as in you have your ST, you have your RE, but the delivery it's a bit different. It's a bit different delivery. That is also very important to understand. And so stick to one instrument. Very important. All right. Then the next thing I wrote down was, it feels more subjective, but it really isn't. It's just as objective as the filtering process, etc. It feels more subjective, but it isn't, believe me. So next thing is, it's important to know, and this is very crucial, this is at the core of our trading plan. So at the core of a trading, what actually is it? It's structure, it's order flow, etc. All these things. But when we use the flow trading plan, this will bring more light to it. This will truly test how well you know your order flow, how well you know your structure, how well you know your liquidity sweep, how well you know your time. Because you are not always seeking out the highest probability condition. And know that you live and die by this trading plan. What I mean by that is, this week was absolute garbage on ES. If that happens, you don't have a choice but to stick to ES. You don't have to trade it. That's not what I'm saying. You can stay out for that week, but you are not switching from instrument to instrument. So you are not going to NASDAQ. You are not going to EU. You are not going anywhere. You're trading ES right there. That is crucial to understand. So you live and die by this trading plan. And of course, that's the same with the filtering process. But the filtering process, you are always seeking that high probability condition. So there's more so a reason to trade in a sense. And again, the flow trading plan or filtering process, neither one is better than the other, right? Neither one is better. This one is just as good, because when you have clean weeks here, look at this. You can make crazy gains in one certain week, but just know some weeks will be like this. But don't let it throw you off. Don't say to yourself, all right, I now need to trade a new instrument with the flow trading plan. No, stick to the same instrument, please. It's very important because I have been there. I have done this. I have traded this plan before. And these are crucial things to stick to. If you don't do this, it won't work. This is the same for the filtering process. If you don't apply the filtering process correctly, it won't work. And that's why it's so crucial, because before I had the filtering process, I was full-time trading DAX a little bit, but mainly ES. I was full-time ES trader, so I know how it moves. I mastered ES. I can confidently say I mastered ES in some sense. Now, it's a bit dusty currently, the mastery, you could say. But when I developed this trading plan again, because I used to trade like this in a very similar way, and it's basically the same, but certain characteristics are a little bit different, but it's basically the exact same as how I used to trade when I focused on one instrument. Then I felt a bit nostalgic actually trying to gather this data, etc., gather this information, because this is exactly how I used to trade. I knew how ES wanted to move. I knew the characteristics. I just knew it. And that's why I love trading the indices for this trading plan, because I know the indices like the back of my hand, right? And for Forex, I mainly know the filtering process. So I have divided for myself. I'm talking for myself here. For myself, I've divided two things. If I want to trade indices, I will stick to the flow trading plan mainly. If I want to trade Forex, I am going with the filtering process. Now, Forex flow trading plan also works. So I'm just showing you indices. I will also show you some EU later on. But just know it works on every market. So the flow trading plan works on everything. Don't let that discourage you. So right here, this crucial to understand. It is important to know when order flow legs are holding. That's when at the right time. Kill zones plus economic day. Economic day meaning a day where we have the economic calendar supporting that ID, right? So that's something we'll go over in the filtering process. And that's something we have gone over already. So we move from PDA to PDA. So that's, again, let me repeat that. It's important to know when order flow legs are holding. That's when at the right time, kill zones plus economic day, we move from PDA to PDA. In between moving from PDA to the next PDA, order flow legs have the highest probability of holding. Write that down. That's very important. You need to be a master of these concepts, and then you can be a master of that pair. That is where mastery comes out to play. That's very important. So give it time as well. Give it time. So right here, the next thing I wrote down was I would argue that the filtering process is mainly for Forex and the flow is mainly for indices. Again, the flow is also for Forex, but indices have more volatility. So when Forex is consolidating, it is truly consolidating. And it is shit. It is pure shit. When indices are consolidating, you will still have the flow trading plan. That's exactly the reason why for Forex I have a filtering process, because it's easier. And for indices, you could argue the flow trading plan is easier to work with. So that is very important to understand. So again, it also works on Forex. Don't let this discourage you from trying the flow trading plan on Forex. It also works on Forex. It's different. There's different characteristics. That's important. So right here, I have also written down trade on news days, FOMC, CPI, and NFP are tradable, but only right after the fact. So after the news release, for example, we had NFP today. After that news release of NFP, then you could trade it. Not before, not during. That's important. Let me go through other things I've written down on this notion right here. Let's see. So it is important to be aware that the 1 hour for the trading plan will be your guideline. Let me actually go over the trading plan on the left here. Let's start off with this. I've said everything on the disclaimer side, on the information side that I wanted to say, and otherwise I'll mention it later on. But currently I have said everything right there, I believe. All right, perfect. Yeah. All right. So flow, no filtering process, one instrument, daily PD ray, daily PD ray. Time is next. 1 hour is your compass, 1 hour PD ray, 5-minute ST/read. That is the main premise. Now, for your higher time frame routine, I would argue you now would do monthly. Let me actually write that down. Monthly, weekly, this is what you would do at the beginning of the week. Then throughout the week, you would do daily, and then you dive into the 1 hour. No 4 hour. You don't need it, in my opinion. You could use it. Again, that is where your own modify to your own liking, what I also said. If you want to use the 4 hour, you can do that, but it's not necessary in my opinion. Why is that not necessary? Allow me to explain. If you are using the 4 hour, in this case, so not in the filtering process, and let me actually go over the filtering process. Why we use the 4 hour in the filtering process is because if you're using the 1 hour in a filtering process situation, so you're scrolling through a lot of pairs using the 1 hour, that will take you months, and that will take you a lot of time and a lot of brain points as well. So that is not worth it. That is not something you would do. That is no, just don't. That's not something you would do. So that is very important to realize. Yeah, that's very important to realize. So the reason why we don't use 4 hour in the flow trading plan, or at least I don't plan on using the 4 hour in the flow trading plan, is because it's in between the daily and the 1 hour. So if we have a PD array on the 4 hour, it will either be shown on the daily already or on the 1 hour already. Yes, it will be a little bit more, it will be different to navigate, because if we have a 4 hour fair value gap, right here, it might look like we have a liquidity sweep on the 1 hour. So it's different to navigate. It's not as easy as you just have this fair value gap. You have more price action to work with, but that's why you will master that one pair. So that is very important to understand, and that is why I left out the 4 hour. Again, that is my own how I prefer it. But if you want to use the 4 hour, then please go ahead and use the 4 hour. All right, so right here, the next thing, daily PD array. So what I mean by that is, of course, we first have the weekly right here. We are coming into that weekly fair value gap. Once we come into that weekly fair value gap, I would now expect higher prices right there, especially when we reject off of that. So on the daily, we have the exact same, and that's why I first left out the weekly as well, because weekly PD arrays are mostly seen on daily PD arrays as well. So it's the same with the 4 hour. Daily PD arrays show the weekly as well, but of course, it's very easy to go one time a week on a Sunday. You can go into the weekly time frame and see, all right, we have weekly fair value gap. That's all you need to do. But the 4 hour requires more work. So right there, we have a weekly fair value gap and we have a daily fair value gap. Now you notice I have a premium and discount of my daily range, my structure range, the short-term range right there. I have a premium and discount right there, because that is important, and how I would do it. Again, this is something you can modify to your own liking, this premium discount, if you want to use it or if you don't. But I would say if you want to modify it to your own liking, you can take away concepts, but don't necessarily add anything new. That is very important, because I have incorporated everything you need in here. And I have incorporated market maker models. I have incorporated this. I have Power 3 in the model. I have a Judas swing. It's all incorporated. That is very important to realize. So if you're adding Judas swing to an already existing Judas swing in a trading plan, then that's double, right? That won't work. It's like, that doesn't work. It's like, I don't even know an analogy, but I think you get it, right? If I already have market maker model in my trading plan, and you now add market maker model to the ST and the RE, where ST and RE is already your market maker model, then that's double. That won't work, right? That doesn't make sense. So that's important. So right here on the daily ranges right here, what I would do is I would draw, especially if we have a big expansion like this, you would draw your Fibonacci and you would get an idea of where discount is. So in the case of bullish, of course, where discount is. Equilibrium, that is ideally where you want to have a discount array. So that's exactly what happened right there. But of course, if you want to use the weekly, it's way easier to navigate, right? All right. So what you would then do is drop into the 1 hour. Well, let me actually first go over this right there. On this, we had a big expansion. Then here we have a Thank God It's Friday setup, a perfect one right there. So we swept that high. Once we sweep that high, what is the first thing that we can target? Of course, we have our classic Thank God It's Friday setup right there that we can take. Then on the daily, the first thing is this daily fair value gap. But if we draw our range, this is what we can target, right? With knowing the weekly as well, We have a weekly fair value gap in the making. I'm sorry. We have a weekly fair value gap in the making right there. So that is something we can target potentially. So on the 1 hour, you want to use the 1 hour as your compass right there from that Thank God It's Friday setup to now the new daily discount rate, which was this first daily fair value gap, but again, using premium discount, this is the one right there. That is what you want to target. So the 1 hour here is your compass using structure, using order flow. The PD rates, the 1 hour here is your compass to guide you to that discount rate. Now, the reason I say why time is very important, because time will exactly tell you which 1 hour PD rate you need to use. And what I mean by that, for indices you have London, you have New York AM and New York PM. New York AM is very strong, equities open of course, but time is the most crucial, because right here we have an order flow lag, right there. But London opens here. Do you now expect this order flow lag to hold? No, you let price guide you in a sense. Now I have no idea why I don't have this marked up, because I'm not sure if it played out or not. But you let price guide you there and let time guide you. So at a certain time, at the session you want to trade, you open the chart and you see where are we floating? What can we reach for? We can reach for this right there. We can reach for that. We could potentially reach into that fair value gap as well, if there is enough volatility to do that. So what you would do here then is dive into the 5 minute, and you would look for a 5 minute ST/re-entry. Now the first thing you would of course do is as well the opposing discount array, which is that one on the 1 hour, but on the daily you have that right there. And then here what you would do is 5 minute right there, go into the 5 minute, and this could be an entry. Now I prefer again, that is, I prefer some examples here will also they don't have this, but I prefer an overlapping PD array. So an overlapping fair value gap with another overlapping PD array. That is what I prefer off of my 5 minute entries. Then right here you have this entry, but I don't like a 1.5 for this. I like more RR. For this flow trading plan, I would like more RR, so leaving it run more. And what I mean by that is, for example, if we have this 1 hour huge range, of course, targeting these lows, that's very exciting because that's a very long way. But what is in discount here? It's that. So that is 3R. Perfect. That is what I would want to target. All right, perfect. So that is exactly what I would want. And then in between your equities open and your PM session, you would again look at a PD raise, but you would first allow time to guide you in a sense. So again, what that means is, let me go over a few other setups, is time is crucial here. And especially on indices as well, liquidity sweep. You will see a lot more liquidity sweeps than you would see on the other trading plans. So that is very important to realize. So right here, for example, you have PM session. Again, equities open right here is very messy. You could potentially say, all right, you took maybe a loss in there. For example, right here, you took a loss and then you had the real move in Asia right there. And that is something you could get involved in, but this could be a loss, for example. Then as well, I need to, all right, bear with me here, but I need to tell everything that's on my mind here to fully make it clear. And right here, we have time, the PM session right there, stings into that order block. Again, if you use more your structure here, that is very crucial. If you use a structure here, this is your intermediate term high. To now taking that intermediate term low, can expect a bigger retracement. What premium array here is in discount? This is your premium array that is in discount. So you would use that one. Or close, you can also use this, but if this is the only fair value gap that is in premium, sorry, I said discount, I mean premium right here, of course. If this is the only one in premium, you would use this one, right? So that is the one I would use. And then in the 5 minute, you would dive into the 5 minute right there, and you would look for a 5 minute ST entry. That's all you need. 5 minute ST. So right there, you have your ST entry overlapping order block with the fair value gap. That is exactly what I would enter off of. And this is perfect timing. It's power hour, the last hour of that day. So bonds closing hour, a lot of volatility. Again, 3, almost 4 hour. Perfect. That's exactly what you would want. Now, you can use the 1 minute. Again, I think the daily PDA to daily PDA, I will show you more examples, but this is the basis of it, right? The daily PDA to daily PDA, using time, which time, kill zones, and of course the economic day. So a day where we have the economic calendar supporting that ID. Then the reason why we use kill zones here and we don't necessarily use kill zones in a filtering process is because here you are way more reliant on time and at which time of the day you see a sweep and which time of the day you see the setup happening. That's way more important for this because the filtering process is less important on time of day and more so important on the economic calendar of that day. And the flow trading plan, I would argue, the economic calendar of the day is less important and the kill zones are more important. And the reason for that being is because right here you have certain liquidity sweeps at certain times. Especially indices, you have certain liquidity sweeps at certain times and especially equities open, etc. So that's very important to understand. So right here, again, you don't necessarily need to know why this consolidated. Again, you could say, all right, we use daily profiles here and this consolidated because we already took that low, but that's not something you need to understand. All you need to understand again here, and that is very relatable to what we saw on the filtering process models. All you need to understand here is that you have a 1 hour order block sitting right there in premium of that range. You wait for it to come there at the right time. You look for a 5-minute entry, and that's all it is. And again, that's all it is. Like I say, like it's easy, but it's not. But you'll get it. Don't worry. So the thing is, when you are trading on time frames, on all time frames below the 1 hour, so 1 hour and below it, you are more reliant on time. So that's exactly why we're using it. So right here, what I was saying is I wanted to go over the 1 minute time frame because the 1 minute time frame is also something you could take, but it is important to understand time frames when you are trading order flow lags. So right here, when I said it's important to know when order flow lags are holding, that's when at the right time we move from PDA to PDA. In between moving from PDA to the next PDA, order flow lags have the highest probability of holding. So what I mean by that is, if I skip through this a little bit more, what I mean by that is essentially at the right time. You can see how this order flow lag didn't hold because it wasn't at the right time. This is Asia range. It wasn't at the right time. That's perfect. Perfect. Literally perfect. So right here, what we see is at the right time, we come into it PM session. A kill zone is the right time. We come into it. We move lower. We have an ST. Order flow lags will now likely hold until when? Until we reach that opposing discount array, which was this low. Well, we have this swing low actually. That swing low first, and then after that, this swing low. Until we reach those, order flow lags will hold. So from this right there, from this high to that low and this low, that is exactly where you will see order flow lags hold. And the reason why this is important to understand, because people will use order flow lags everywhere. I mean, from here, from there. If it isn't in a PDA to PDA at the right time manner, and that's the same in the filtering process. If it isn't in the PDA to PDA using the economic calendar for the filtering process, then order flow lags don't really have a chance of holding. Yes, they have a chance of holding, but the probabilities are way less in your favor. And the reason why this is important, because if we now drop into the 1 minute, there's a lot more price action to work with. So an ST plus a re-entry on the 1 minute equals a 1 5-minute ST entry. What do I mean by that? Right here you have ST, then this is pretty ugly. Right here you have ST getting respected, fair value gap getting respected. Then here you have your re-entry, right, for the 1 minute time frame. Then you would cover that high, the intermediate term high. If you are trading the 1 minute right here, I would always advise, that's also what I've written down on the right side of my screen. When you are taking 1 minute entries, I would advise to cover intermediate term highs. And the reason being for that is because when you target the 1 minute right here and use the same concept right there, you get a bit more RR, but there is a 5 minute fair value gap or 5 minute premium array likely hovering above your head right there most of the time. So for example, if I move this a little bit, so you can see the 5 minute ST equals the 1 minute ST plus re-entry. It's basically the same. Well, you'll get the same a lot of the time. And this is where I would cover that. You'll get the same a lot of the time. So that is important to realize. And what I said with order flow lags, here order flow lags will hold on a 5 minute basis. But of course, if you dive into the 1 minute, you have to be a master of the time frames. What I mean by that is right here, you see order flow lags aren't really holding right there. And we sweep that, we sweep into a fair value gap. The intermediate term high is holding. So you have that structure that is holding. Your new intermediate term high right there. We continue lower again. We have a new order flow lag right there. This order flow lag isn't holding. And I know if you're trading the 1M, you would likely potentially even take this trade and say, all right, we need to continue lower from there. You need to be a master of the time frames right here. And the reason I say that you need to be aware of your surroundings is because right there, when trading this order flow lag lower, you need to be aware that there is a 5 minute fair value gap hovering just above your head. And this applies the same to trading that 15 minute. So if you want to trade 5 minute order flow lags, just keep in mind, if there was a 15 minute order flow lag or fair value gap hovering above that 5 minute order flow lag right there, then you would also be aware that it can sting into the 15 minutes. So it's different. You need to be very aware of wherever fair value gaps are, what the order flow lags are from moving from the PDA to PDA. That is crucial to understand. What you could do is you could wait for this new 5 minute price action. And again, this is modifying it to your own liking. 5 minute fair value gap where you have that 5 minute overlapping. And then here you wait for 1 minute ST, for example. And if you get it, do you actually get it? I don't believe you get it. I don't believe you get an entry here. Maybe very late off of this order block, but it's very, very ugly. But that is something you could implement into your own modifications. So, all right, perfect. So that is time. That is order flow lags. Let me think. Fake tops and fake bottoms. Let's go over fake tops and fake bottoms. So this is the true definition of mastering a pair and mastering instruments. When you notice these kind of things, because this, when I talk about fake bottoms, and you'll hear me talk about it enrollments, in old enrollments, you'll hear me talk about it a lot of times. And when I was trading ES only, there was a thing I recognized, and it was fake tops and fake bottoms. And what I mean with fake tops and fake bottoms, it is how tops and bottoms form in the market. So, for example, this right here, this is a fake top. Now, let me go over why it is a fake top. Usually swing failures right there without reaching into a premium or discount array. So right here on the left, I have no idea if it reached into a premium array. So when this happens, when we just have this one leg up, you can see how all the up candles are covering what's inside. Everything is covered. When this happens, you usually have one last sweep, which in this case is your Thank God It's Friday setup. And then you have your breaker pattern, and then you continue lower. That is the same with right here. We are moving higher on this basis, right? This, I immediately recognize this is a fake top. This is not how the market tops. This is not, and again, this might be a little bit subjective, and it is very hard for me to explain this. And the reason why it's hard for me, it's always been hard to explain fake tops and fake bottoms for me. And the reason being is because it's a very personal thing. It's my own unique edge that I created, and I want to share it with you, and I want to create guidelines for you. But if you don't study fake tops and fake bottoms, it will never make sense to you. So what I did, I have a Notion, and it is shared inside the Discord as well. I have a Notion specifically with case studies on fake tops and bodies, and that fake tops and fake bottoms, and that's only I did that for a crazy amount of hours where I just studied fake tops, fake bottoms. How does the market top? How does the market make bottoms? And that works, but it works on certain instruments. It works on the instrument that you want to master. That is when you master that instrument, and that's how I've been able to master ES, because I create studies like that for a certain instrument. And the reason I didn't have that involved in the filtering process, and it's not a main thing I go over, because there was no reason for me to go over, because a fake top, a fake bottom is not that relevant on the higher time frame, in a sense. So that is very important to understand. So fake tops and fake bottoms, for example, you see it here, exact same thing. It is so characteristic of ES. This is absolutely beautiful. Right here, this is the exact same thing. Can you see how every up candle right here, you just have a huge up candle? There's just a huge up candles, and then in between, this is like a shelter. It's like a sheltering. You have one range in here, and these are all up candles, and this is a shelter in between. And then what you usually see is you have one last move, boom, there, and then you have your real top in the market. And that's what happens a lot of times. Same with your bottoms, etc. You usually, and that's where ST also came from. So in here is usually where you see your ST. In here, you don't necessarily have an ST, but this is more so a swing failure where you usually have your first marked structure shift. So usually you have something like this, marked structure shift, and then maybe even once more, and then boom, you have the real top, and then it moves lower for real. That's what happens here, and that's exactly what happens here as well. So that is crucial to understand. Not necessarily crucial, but this is things you will pick up on. So if you study this, then you will pick up on it. No worries. All right. So make use of time. Liquidity, very important to understand. When we are now talking about liquidity, we will be using liquidity more in a flow trading plan. What I mean by that is, for example, right here, I have a few setups that are incorporating liquidity. Right here, we have an intermediate term high, right? Get the basics right first. We have an intermediate term high right there. We have order flow going lower. We are targeting that daily, we are targeting that daily discount rate right there. So we know 1 hour is our compass. We are still continuing lower. We first off have a potential entry right there, even that this is where it is, where you would cut the line between objectivity and subjectivity, right? Because this right here, it is in discount. Yes, it is. It is order flow. Yes, it is. It is still part of the structure. Yes, it is. But this is not part of your premium of that range right there. This would be your fair value gap in premium. Would this still be an entry? Yes, it would. Why would it still be an entry? This is exactly what I mean when I say time. Time is the most important here. Because if this was hovering a little bit higher in London, then I would likely expect to move higher. But right here, it's hovering right there, and you are allowing our time is your guide right there. Because time will exactly how far it will sting into it, how far we will reach for. That is what time will tell you. So what I mean by that, the kill zones will exactly tell you that, what it will reach for, which premium rate it will reach for. Right here, you don't even have a setup before London. So London will tell you it comes into that. And the beauty of this is, for me, it's more so beautiful. It might be more difficult for you in the beginning, or if you're not really used to this. It requires a lot of reacting and adapting. So when you see this, you see that move into that fair value gap, and you don't see it come into that premium of that range, then right there you react. Boom. You already see London is going low right there. I know this is a beautiful setup, overlapping premium raise right there. Boom, covering that, targeting those lows, or even that daily discount rate right there, since we're now close. That is exactly what you would do. So you would more so react to whatever time is doing right there. That is crucial to understand. I hope that makes sense as well, because that is very important. So right here, what I was saying, the use of liquidity, because we are now having this intermediate term range, right? New intermediate term high, intermediate term low taken right there. Once that happens, the very basics, what happens again is we can expect a bigger retracement, and short-term ranges are not necessarily protected anymore. So even though this is an order flow leg right there, is this protected? No, not necessarily. Why not? Because structure-wise, we can expect a bigger retracement. A retracement into what? Premium of that range. So whatever is at premium of that intermediate term range, right there, there's a high sitting at the premium. If this fair value gap was sitting at premium right there, we would have expected it to trade into that, but it isn't. It is that high, that liquidity pool that's sitting at premium. Will we trade into that liquidity pool right there? Who knows? What will validate the ID? Time. At the beginning of your kill zone, you see where are we floating. So right there. Right there. This is by the way, this is a difficult lecture as well for me to explain, but for you to understand, I feel like it might also be a difficult lecture. So we will go over this more and more and more because there's a lot going into this trading plan. A lot more. Not necessarily a lot more, but it's a whole different approach to the market, right? That's also not true. It's not a whole different approach, but it's different. It is different. It's the same but different. If that makes sense. And it's the same because you still have the same easy concepts. You still have everything involved here. There's still your macros. Everything is involved still here, but it's a bit different. So what invalidates this ID? It's time. Where does PM session start? I always took 1 PM, by the way. I never took 1:30 PM. I always took 1 PM. So if you'll hear me mention 1:30 PM in the Kill Zones video on YouTube, I'm sorry, I use 1 PM. I always use 1 PM. So at 1 PM, what do we see? We have that ST created right there. There's not even setup before that, right? There's not even a setup before that. Yes, we have this setup, but is this setup logical? Not necessarily, because we have this intermediate term range, that order flow lag. Will it hold? It could, if at the right time, and if we reach into that premium array right there. So if the respected there and we had this ST already here, then it could. Yeah, it for sure could. But that's whole different. We now need to react here. We see PM right there sweeping that high at premium of the 1 hour intermediate term range. What happens is an ST right there, this overlapping with that breaker right there. That is your entry right there. That is reacting and being able to react and being able to adapt right there. Targeting the 1 hour opposing. First, I think it was that swing low, and then after that swing low with the daily discount array right there. That is exactly how you would do that. And that is time validates that ID, right? It's time that validates the ID, and then the 5 minute right there. You're not getting confused on a 1 minute because there's nothing to see there. Let me show you what I mean. On the 5 minute, you don't have an ST yet. You don't have anything to look at yet. There's no reason for you to be awake, essentially. There's no reason right there to look at this chart. Only once we have this bearish fair value gap down, that is when it all starts to click, like, right? You have premium of the range, liquidity sweep, then we continue lower. If you go into the 1 minute, there's a reason, and this is why the 1 minute is dangerous for this, could be detrimental if you don't use it at the right time. And the reason being for that is you will see an ST here, you will see a re here, but it's not at the right time. It is could be at the right time, but we haven't swept anything. And the 5 minute will filter out a lot of stuff right there. So that is important, right? That's exactly why I chose the 5 minute as well. Let me show you another example, and then let's go over EU as well. All right. So right here, we have again a liquidity sweep. We reach the daily fair value gap. Once we reach that daily discount rate, you want to be careful, especially when we have an opposing ST. So right here, we have an opposing ST. Now you ideally want to stop looking for new shorts right there. If we didn't have that opposing ST right there, you could still look for shorts. Even if we reach that daily fair value gap, you could still look for shorts. If there was no ST, so no bullish fair value gap high right there. Right here, we continue lower, we reach that daily fair value gap, then we already had an ST, we have a new ST right there. Then here again, same thing at the right time. At the right time, we have a liquidity sweep right there. So you mark out the lows, you have your PD arrays. These are your PD arrays. You have an order flow leg right there. Yes, you have an order flow leg. Yes, you have. But at the right time, 9:30 right there, you go into the 5 minutes. And this is when you know you are aware of the higher time for PD arrays. You are aware of the 1 hour PD arrays, and the 5 minute is guiding you. Not necessarily guiding you because you are only looking at 5 minute ST entries, but it is guiding you as in you are very aware of time and you know where the PD arrays are, so you know what you can target, etc. And that is very important, right? So right here, the sweep at the right time, right there, 8:30 already accelerates, and that is again a characteristic of ES. When 8:30 already has a fair value gap in the leg, when that happens ahead of 8:30, then 9:30 will likely not take out whatever low was created right there. That is a characteristic, and that's the same on Forex with Asia range and London, for example. This volatility comes into the market, but it will not take out that right there. That's important to understand. Because 8:30 already reached into that, already displaced higher. So right there, that could already be your entry. Right there. Overlapping reclaimed order block right there. This could even be your entry even lower, but I like this entry. And right there on the 1 hour premium array, which is first one is that high. That is already perfect, right? You could even target further to that, for example. And allowing that RR to play out, that's also absolutely perfect. All right, then right here, again, you have the same liquidity sweep into what? That breaker right there. Important, again, time. It's time validating this ID because at the right time, at that AM session right there, London didn't reach into that breaker block. London didn't reach into that 1 hour fair value gap. It reached into this, but why did I not use this? Again, if we now use the ranges, premium and discount, this is what you would use mainly on daily and 1 hour, I would say. Use the ranges, intermediate term low, your potential new intermediate term high right there, but we took out an intermediate term high, so we could expect a bigger retracement. What is close to discount? That breaker right there is in discount. This fair value gap is essentially in a discount right there. It's close to discount essentially. That's what I mean. This is your fair value gap in discount, but this is already close to discount. Then right here, what validates if we go into this fair value gap or that fair value gap? You don't have to have set rules for this, and that is why when you have the balance between objectivity and subjectivity, you don't need to have rules for this because time will tell you exactly which one it will reach into. Because if we go into the 5 minute right there, if it wanted to reach into the fair value gap lower on the 1 hour, if it wanted to reach into the lower 1 hour fair value gap, it would have done so. And it wouldn't have shown a setup right there. It wouldn't have shown a 5 minute ST right there. That is important to understand. As well, when we have that 5 minute ST right there, you don't necessarily need to enter off of a fair value gap. If there is a fair value gap and the other discount array is a bit higher, that is also a perfect entry. I just prefer the overlapping parts right there. Then, what is your opposing? That is right there, right? Perfect. This right here could also be a trade, but let me show you right here. If we now went into the lower time frame right there and we go into the 1 hour, we have this order flow lag holds beautiful. So right here you have a first ST, you have an ST, then you have a re, for example, right there. You would cover intermediate term low or the potential intermediate term low in the making right there. That is what you would cover. And then we continue higher right there. Perfect. This could even be another entry right there. And then we continue higher. And then we start failing with order flow lags a couple of times. We fail this order flow lag. Why does that happen? That is again where the mastery of the time frames comes in. You first go into the 5 minute. What do you see? You see the order block right there. Fair value gaps there. We don't push higher here. Why not? All right. Interesting. And then what you would do is you zoom out again. And then what do? We reach into the discount right there. into discount into that 15-minute fair value gap, then right there, that is exactly when you would go into the 1 minute again. And the reason being for that is because again, the same thing that we always touch on with the filtering process. Yes, you have a 1 minute fair value gaps sitting right there. This right here, this would absolutely be invalid. And the reason being is because we already have a 5-minute fair value gap and a 15-minute fair value gap even hovering below this order flow lag on the 1 minute. So this is not one you would want to be trading. So right here, you would want to wait now. You would zoom out on the 5-minute and on the 15-minute. And then here you would see, all right, in between that moving from discount rate to that premium rate on the 1 hour basis, in between that, you would see, all right, we have this 15-minute fair value gap right there. That is what I would use. Then we go into the 1 minute. From there, we go into the 1 minute. And then you would see, all right, we have a new ST right there. That is my potential entry, covering even the breaker right there. Is it worth the RR? 1-1, not sure. So that is a potential. That is how you can modify to your own liking as well. But it's very important to there be aware of your surroundings. That's exactly what I mean. That's exactly the reason that we also use on the filtering process, where we go over if there's a higher time frame. So the time frame above it is a fair value gap below your order flow lag. Then of course the order flow lag might not hold. It's the same thing here. The 1 hour needs to be in context of the 5 minute. The 5 minute needs to be in context of the 15 minutes. And the whole 1 minute to 15 minutes is in context of that 1 hour moving from discount to premium array. That is very important. So again, I'll touch on it one more time right here, and I'll go, of course, in the future as well. But right here, this is not a trade you would take because you master the time frames and you see there's fair value gaps hovering right there below it. That's very important. And of course, in this sense as well, you took this intermediate term high right there. Bigger retracement again is expected. So you master. See, can you see now how the concepts are amplified? They're amplified in a sense. They are the concepts are still the same, but they are somewhat amplified. You need to be more aware of them. All right, let's. There's a couple entries, but again, I don't want to make this 5 hours long. 2 hours is enough. No, I'm joking. Let's go over EU right here. So I touched on make use of time, liquidity, fake tops, fake bottoms, premium, and discount. That's what I touched on. All right, perfect. Then the next thing is follow 1 hour until opposing ST from daily PD rate. Again, if you have an ST from a random ST without a daily PD rate, then you can still trade in that direction. For example, right here, we come into that order block or breaker block, sorry, right there. And we could target those highs. We have an opposing ST right there, but this is not valid. Why not? It's not coming off of a daily premium array right there. So that's not something you would want to use. That's important. And that is also the premise, right? Where we use daily PD array to daily PD array. That's exactly the whole premise behind it, right? So if there's a 1 hour ST, it's not really relevant because it's not coming off of a daily PD array. All right, perfect. This is also what I mean when I say on EU right here, when I say we are coming off of, or we are targeting this daily fair value gap right there, and we could expect lower price of that. We can still take longs right here. Why is that? Because we haven't had a 1 hour ST right here lower. So once order flow is still aligned right here, you might take a few losses right there if it does want to create an ST, of course, and you do get an entry there. But what you'll see most of the time here, it will continue until we create an ST. So right here, there is where we create a ST off of this daily fair value gap. This is exactly right there. That is where you want to stop looking for entries longs. That is where you now want to look for shorts, targeting this daily opposing discount rate, using the 1 hour right there. Again, using time to guide you right there. Potentially this swing high right there. Sweeping that at the right time in New York kill zone. Right there, beautiful. 5 minute ST. Let's see if we get it. 5 minute ST at New York starts right there. Perfect. Already, same premise, right? We already displaced before it, so that New York will likely not take out that high. Same with the 830 and 930 rule. Right here, you have Before New York, we already display, so New York will likely not take everything out there. We can already take this entry right there. And you can see how you needing to use this time and this 1 hour liquidity sweeps. It is crucial to stick to 1 hour to one instrument, because if I was trading this on all these pairs, I would get lost. I would not take one entry, because after the fact I would be like, there were so many entries, but I missed all of them because I was trying too much. I didn't have the brain power, the brain points to focus on every single pair here, every single instrument on the 1 hour. That's just not doable. That's exactly why we use 4 hour minimum on the filtering process as well. All right, what was I saying? Yes, here, if we continue here, we come into that 1 hour fair value gap. We don't have an ST yet, so we can continue taking longs right there. From 1 hour fair value gap right there, at the right time, again, 1 hour ST, again, beautiful example right there. You don't need to enter off of that fair value gap. If you have the breaker, this is a picture perfect breaker right there. So I would take this right there, enter off of that, boom, that is your entry. Targeting opposing right there. Absolutely beautiful. Did I target even further right there? I targeted this 1 hour fair value gap, this 1 hour fair value gap. So here you have a couple of more entries. Again, you can see this is again validated by time, right? You have 1 hour ST. Did we come into a daily fair value gap? I believe we did. Did we? Yeah, it was this daily fair value gap right there. Then we had 1 hour ST right there. That is exactly when you would look, when you would stop looking for shorts as well. If we have it, did we have a 1 hour ST already here? We didn't, I believe. So this right here, this short, for example, this short in London right there. If we had news supporting, I don't think we had news supporting this ID right here. If we had news supporting, that already is a short ID, right? Then right here you have your ST. And right here again, by the use of time, liquidity sweep in London, 5-minute ST. Let me go over the 5-minute ST. 5-minute ST right there, and we continue higher right there. That's exactly what you would want to see. All right, so I hope that makes a lot of sense. So I have gone over this. No entry when opposing 1 hour PD ray has been hit. I think that makes sense, right? When 1 hour PD ray, the opposing 1 hour PD ray, so your target essentially, if you were to be in the trade, your target, if that has already been hit, then you don't take an entry anymore, right? That speaks for itself, I believe. And if it doesn't, then please let me know and I'll go over it. But 5-minute entry on something overlapping, yes. Modify it to your own liking. Exactly. I think I went over everything. I will try to, of course, make this as perfect as I can, the Notion as well. This is and you can see there is steps to this. There is objective still. There is objectivity to this. But it might, at first glance, it might seem like it is not subjective, because if you say we focus on time, it's very vague. It's super vague. But if I just say focus on that kill zone and that kill zone will sweep, then you just need to react and see that 5-minute ST. That's super objective, because you have kill zone time, 1 hour PD ray, 5-minute ST. That's it. That's it. And the reason I say time is, again, at a certain time you will reach into this liquidity pool. If London wanted to reach for this, it would have done it most likely, right? So that is why I say time. That is very important to understand. And if otherwise it wouldn't have given a setup, like we went over earlier as well. So again, I will touch on this more and more. Don't worry, and if it doesn't make sense or anything, please let me know. This is the naked model, but this is already a finished model in itself. I will go over it more in the MMP as well to fully indulge into it and see how it's different from the filtering process, etc. And then I will see you at the next one. All right, perfect. Thank you.